Alright, could you guys hear me in YouTube land?
Stock by CL, 326 contracts.
10 basis points, the 2 spot 4 to 7.
If you're in YouTube, please let me know if you can hear me. Anyone? Bueller. I see 15 people on here and no one can hear me. Let me know, please. Alright, somebody in my trade room, could you hear me on the YouTube channel? Thank you, Kendall, I appreciate it. Alright, let's do the disclaimers here. Here's my information. Scalpel City Trader, email, either one of these, Twitter, Apex Trader Funding, we'll talk about that. The code for any of the discounts that are going on, it's always Pulcini 50, whether it's the 90% they have now, 90% off, or the 50%, or the anything that they have, Pulcini 50. Okay, let's do these disclaimers and I'll be back in 90 seconds.
Risk disclosure statement. There is a risk of loss in trading stocks, ETFs, commodity futures, derivatives, options, forex, and cryptocurrencies. This risk can be substantial and therefore investors should carefully consider their financial suitability prior to trading. Past performance is not indicative of future performance. The software, strategies, chat rooms, websites, and any associated websites are digital and used for educational purposes only and should not be construed as an express or implied promise or guarantee that you will profit that losses may be limited in any manner whatsoever. Users of the information accept full responsibility for the outcomes of their deployment in Stops and Icebergs, LLC, and any associated companies, agents, management, owners, and customers harmless without reservation. Please trade responsibly. Commodity Futures Trading Commission, CFTC, Rule 4.41, hypothetical and simulated trading performance results have certain inherent limitations, some of which are described herein. No representation is being made that any company is likely to achieve profits or losses similar to shown. In fact, there are frequently sharp differences between hypothetical or simulated performance results and the actual results subsequently achieved by any particular trading program. One of the limitations of hypothetical performance results is that they are generally prepared with the benefit of hindsight. In addition, hypothetical trading does not involve financial risk, and no hypothetical trading record can completely account for the impact of financial risk in actual trading. For example, the ability to withstand losses or adhere to a particular trading program in spite of trading losses on material points which can also adversely affect actual trading results. Because these trades have not actually been executed, the hypothetical results may have or overcompensated for the impact, if any, of certain market factors such as lack of liquidity. There are numerous other factors related to markets in general or to the implementation of any specific trading program which cannot be fully accounted for in simulated trading or in the preparation of hypothetical performance results involved, of which can adversely affect actual trading results.
This trading room and this webinars are not intended to mirror my trades or to give specific trade recommendations. Analysis itself, I share trades and potential trades that I'm taking for myself based on my personal analysis. The goal of this room is to teach traders how to identify specific areas to trade and manage themselves, but ultimately the decision is yours. Trading is extremely risky, and if you decide to follow my personal trades, you do so at your own risk and could potentially lose your entire account and even more. I'm not always profitable and have routine drawdowns on my trading accounts. The spreadsheet you have access to is my personal spreadsheet that I use to enter zone values and ATR values and help me pinpoint exact prices for my trades. You can see when I enter zone prices into the master spreadsheet as well as the prices to enter trades whether you want to go long or short. You have the ability to copy this spreadsheet and enter your own values and use mine to confirm zone prices until you're able to draw the zones correctly yourself. The spreadsheet is not telling you which direction to trade because it has entry prices and stop prices for both long and short positions depending on which way you personally decide to trade. Alrighty. So we got some activity in crude here. Large stops just fired off. Keep an eye on equities too. There was a bunch of stuff right at the open and it's kind of done nothing. So we'll go back to that here in a second. So you see here you had 662 stops in crude. That's a ton. It's almost five times. It is 5 times normal threshold. So definitely want to draw that event. We'll go over drawing these zones and the basics like we do in all these Bookmap webinars here. I also have a hard stop at 10 Central. Bruce and Vadim are doing a Bookmap webinar on the sweeps and absorption indicators, so I don't want to go over their time, and plus I want to watch it too and see if there's any updates. I'll put this. This is the link for that in the room. You can't hear myself. I don't get it. Excuse me. All right, so I think that's right. Yep. So that's the latest event. I think something else just fired off here too. You had buy ice right after that. So let's get both these zones drawn and see how we're going to trade these. So again, to draw your zones, you usually have your bubbles up on Bookmap.
pull the slider left.
RTY Ice Iceberg by RT. 151 contracts.
Pull the slider left, have the last price line on your chart, right click, configure visible components, make sure that's checked, and then you can actually draw your zones accurate versus trying to draw on the bubbles, which I did for years. So now we will incorporate all the prices that happen in this spike. You can see this market, this was the spike, popped up to here. Looks like it started down here. You may have to adjust this.
NQ stock sell NQ. 168 contracts.
Alright, we got something in Q2
NQ
obviously.
Ice Iceberg sell NQ. 151 contracts.
Alright, so that's the second step rose of the day in NQ. Step rows are sell stops and sell ice. You don't see it very often. We call it the unicorn because it doesn't happen very often. It's the sixth wonder of the world. My sixth setup out of my trading setups that I use that my SI indicator course is based off of. Alright, that's that. Let's come back to this in a second. I don't want to miss this NASDAQ because most of the traders that get on these are trading
S&P Ice Iceberg by ES. 701 contracts. NQ Ice Iceberg by NQ. 299 contracts.
The highest since March 10th.
Alright, is something hitting here? Somebody talking? A lot going on all of a sudden. Alright, 775. So it makes this threshold event look tiny. The stop event was threshold was 150 in NASDAQ. That was 216. You got another 700 sell ice here. So this is on top of the one earlier we'll go over, but let's get this drawn. Something's going down. Looks like that. To there. I already drew one unicorn zone. I'm going to just change this. I'm going to make this just dark blue.
Gold stock by GC. 308 contracts.
Alright, so everything's just going to fire off at one time. So it should be easy to keep track of. Alright, so that's the current zone that just fired off. I usually use dark blues for double whammies, so double whammies are, you have buy stops there too. So what I'm going to do, I'm going to make this one big zone. So the whole idea of these zones are you're trying to find these concentrated volume events, aka trap traders, and then when the market moves out of here, you take advantage of it, right? So we did have
NQ Ice Iceberg by NQ. 222 contracts.
So there's a battle of icebergs, right? So you had 700 ice here, you had another 300 here, you had another 200 here, you had stop runs. So I'm going to make that one big zone and we'll trade off of that. Let's just take this down. This market's trading like there's something out, so we'll see what's going on here. We're always the last to know, obviously. After the market moves 200 points, then they come out and say what it was. But alright, so that looks like we got everything. It's a wide zone, but there's a lot of volume in this area, right? So let's hurry up and plug this in the spreadsheet. We know it was our exact trading prices. Spreadsheet's part of my trading room. 15,078.75. If you come in here, you get access to this.
S&P Ice Iceberg by ES. 702 contracts.
So I'm going to do, you guys remember last week I did ES first and I missed a whopper trade in NASDAQ. It was like right at the open. So I'm going to, NASDAQ moves much faster, so I'm going to get this and then we'll go over to ES. The bottom of the zone is 15,054.50. Current ATR is 28.82, so I'm using ATR as average true range. This is just telling you the exact the volatility as of right now in these markets, and it's telling you what the volatility is for the last 5 minutes. Because I'm a day trader, I want to know what it's currently doing. So it's rotating about 29 ticks or 29 points every 5 minutes right here. All right, so so for the spreadsheet that we use, you plug in your ATR, you plug in your zone prices. Let me just make sure that's right. Yeah. And then with that information, everything just populates here automatically. So I know for this to be a short setup, which I demand an ATR away from the zone, the validation price has to be 25.75. So if that market touches 25.75, which it has not yet, then this is an official bearish setup and we can trade it accordingly. We have a bunch of different trading strategies that we're doing in my room. These are a few of them that we're doing. There's many more on the way, but
Gold stock by GC, 195 contracts.
all right. So gold's rolling. I was short earlier. We'll go over that trade. But anyway, these are the
5-year tips yield.
these are the different trade strategies that we're doing in the room. They're all independent. You could potentially have multiple on, but they're independent. So right now we're just waiting to see. I don't judge what these zones do until I can get an ATR away from the zone, right? So that's just from watching so many of these over the last 5 years. I demand a full ATR. If the market could push a full ATR out of this volume event, this dark blue zone, then that shows me it's showing bearish tendencies, and I will trade it accordingly. The conservative trade is waiting for a retest of the volume event, which happens with ridiculous regularity, and then when it fails again, then I get in the trade, right? So I tell you guys every webinar, this is the science. There's no disputing what happened here with the CME MBO data, the enhanced data that you get on the SI indicator. How you trade these zones, that's the art, right? So if you're just learning or you understand this, I would definitely follow the way I trade these step by step, because I have the experience of watching all these. And once you watch, 50,000 of these things, and you want to come up with your own rules, absolutely fine. You can come up with your own rules right now if you want. But the point is, take advantage of my experience of trading so many of these, and trade them, by the rules that I trade them. And then once you get good at these and understand how these markets react and understand that this is the ultimate edge, there's no better edge in trading than understand real-time volume events. Then you can start to curtail it to your own rules. So again, I'm waiting for this price, either this price, 25.75, to make that a short setup, or if it gets above there, 107.50 to make it a long setup. So we just sit here and wait. So what I was talking about earlier, there was another step rose. So first of all, step rose don't happen very often, and we've seen two. So, and there has been some heavy sell ice. Actually, let's head over here. I forgot to do ES, because ES is in a real close to do or die area too. So this was actually buy ice. But anyway, there's been a lot of sell ice in NQ. So that's, the big money is not always right. And there was a misconception when this first came out where, when I first started doing videos, these competitors of Bookmap, there's not really a competitor to Bookmap comparatively, but they were trying to discredit what I was doing, where they would think I would say every time you see buy ice, you just buy. And that's not correct, right? We have an actual distinct setup that's broken ice, that when it's wrong. The point is, we're trying to find these areas where traders are trapped. So yes, it's a higher percentage that this buy ice will hold, because it's the big money, right? And the big money pushes the market around. They own the markets, right? So, but they are wrong sometimes too, because there's times when other big money comes in and runs these guys over, right? So it's, we're judging by how the market reacts to these areas. So don't just assume because you see buy ice, you just want to jump in on a long. We have distinct rules that we use to determine if we want to go long, right? All right, so that looks like I got that in. This was, I got both of these in. I'm combining these two, right? So I got 1374 buy ice there, and then it came down here, and another 864. So you got about 2300 buy ice in this immediate zone here. The top of the zone's 44.1750 down to 44.15. So we'll plug that in our spreadsheet. And your current average true range ATR is 4.93, which is not bad considering, like yesterday, for instance, it was like 2 in the morning, so that's not too bad. It means the market's whipping around. All right, so this is an official bullish setup for me, right? So just based on the volume event, this is bullish, and then we'll look at where we're at in the bigger picture and these other strategies I use to put on trades. But I already know this is a bullish event. Why do I know that? Because it hit my validation price of 22.50. Right here, right now. So we actually have another trade in the room that plays. So we just talked about, how these markets have a ridiculous regularity to come back to the zone. Well, we actually have like, it's more of an automated trade. It's not automated. It's going to be automated, but the point is, there's no subjectiveness. And this is this part of the spreadsheet. So again, you guys get this as part of my trade room. But this would be the ATR short. So the minute it gets an ATR above that volume event, you short it. Here's your stop, and all you're doing is you're playing for a return back to the volume event, and you're out. So there's no like questioning. Okay, I'm in. Well, where should I get out? The minute it gets back here, you're out. If you're following that trade strategy, but it's without question, you know. My estimates from watching so many of these, it's at least 70% the market will return to this zone. What we're working on in the room is what's the sweet spot, right? Is it a 1 ATR? Is it a 2 ATR? Is it a 3 ATR? So usually in equities, 1s and 2s are the best. Right, and we have some disqualifiers too. I'm not going to get into all that because that's part of the trade room, and I'm not taking these ATR trades on these webinars anyway because they're too fast and I can't keep up because I'm trying to do the position trading strategies. But just know that we do have, for you scalpers out there, we do have short-term trades that this is already established, this ATR trade, and then I have this market pulse that's pretty incredible. I've been putting examples in my trade room of that. That's a really good scalping strategy too. We'll go over that if we see some examples here. I won't trade those on here because again they're too fast. But just know if you are a scalping junkie, which everyone wants to scalp against computers for some reason, then there are options that you can actually compete. Because if you're trading off this dome, don't send me an email. I can't tell you how many people send me emails asking how to trade off of the dome. You can't unless you write programs. You think you're going to trade this by hand just watching this? It's not going to happen, guys. That's how I made millions of dollars. If I'm not doing that, it's telling you something, right? Not that I'm the best trader in the history of the world, the best scalper in the history of the world, but if I was still able to watch this dome and make sense of it and trade off of it, I would be doing that, right? Instead of getting tortured with these position trading setups, because my brain is geared more towards that fast twitch type of trading, right? So I've conditioned myself over the years. If I wanted to stay in this business, I had to get away from that and learn this stuff, right? And then when the Bookmap came out with this, I said that's the best edge I've ever seen, and I went back to trading futures. So anyway, stop wasting your time if you think you're going to get an edge staring at that. Unless you can write even if you can write programs, you're going against it's algo versus algo on this nonsense, and it's fleeting, and it's not real. A lot of the size isn't real, and you can't lean on any prices. Meaning, in the old days, the ES would be like 2,000 up, right? On the offers. So if I wanted to sell, so say I'm like, okay, I'm going to sell right here. If I needed to get out, if I sold 1,000, I can turn around and I knew I can get out because that liquidity was there for me to get out of my order. Nowadays, this stuff means nothing. You could see 500 in here a lot of times and it'll come up and it'll disappear, right? Because these computers are playing games. That's what this is. You see all this, it looks like a Christmas tree. That's algos, putting in and pulling orders. So it's an exercise in futility if you're trying to trade off the depth of market, aka dome. All right, so that's my first little rant of the day. All right, so we're waiting for a retest of the zone, possibly go long ES. Let's see where we're at in Mr. NASDAQ. I'm going to be nice to him today. I'm not going to call him names yet. We still don't know what this setup is. Let me get rid of some of this stuff too, because it's going to be confusing for new viewers. So, I mean, this was substantial at the open. This first step rows, again, step rows is buy ice and stop runs in the same order. I mean, in the same direction. But this is the newest event. I don't want to confuse people, so this is what we're watching. I want to see how this market trades out of this. So we'll either take a long or we're going to take a short. As far as bigger picture views, then I'm always looking, for these different trade strategies where we are in the bigger picture. This is an important area for this market. Right? So yesterday, over the last few days, this has built balance. So what we've been talking about in my trade room is you come up with a thesis, right? So this has happened over the last couple weeks. We had balance, multi-day, week balance, broke down, failed breakdown, got through the high volume node of that. So the high volume node is just where the most trade occurred in a balance area. Once it gets through there, this market should rip. For this to be just sitting here now, so many times some of the best trades are what should happen, what normally happens. When it doesn't do that, well, when this thing finally moves back lower, then you get multiples of what should have happened in the first place. So this market should have ripped, especially these markets. We all know if you've been trading these markets for the last 5-6 months, like every move is just countered and does that. For this to just sit here, And it's not showing its hand yet. I mean, it's still building balance here. But if this balance breaks down, I'm expecting a whopper move. I'm not saying it's going to happen today, but that's just my thesis, right? I'm a day trader. I'll trade both ways. Even if this did break down from this balance area, right, thesis-wise, if I got a volume setup that was long, I would take longs. But the point is, because I'm a day trader, right, and we all know the market rotates, so I'll take advantage of that. But my point is, with my longer term thesis, if this market breaks down out of this balance after not ripping after that failed breakdown, then my thesis is short, and then when I get setups to the short side, I can trade more size, bigger, A+ setups, right? I'll still take longs, but the shorts I'll take much bigger. So that's what I'm eyeballing right here. We're basically sitting right in the zone, tons of volume in the zone, right at the bottom of this balance. So this is either going to bounce off of here and just keep building balance, or maybe rip. But if this breaks, watch out. And like I said, based on the thesis, I think it's going to be a pretty decent sell-off. So, and you notice the words I'm using. I think, I don't know, nobody knows, right? All you know is what's put in front of you, aka real-time volume, and you can trade off that the best you can. Nobody knows what's going to happen. Right, so I got more. All right, so we're still waiting for this retest. So here comes the retest of that ES zone, and we just got more size in NQ, and I want to head back over to crude. So let's see, did this get an ATR above this zone to make this a bullish setup as well? So we're watching NASDAQ. So we needed to see 0750 to make that a bullish setup. That did not get to 0750, so we still don't know what this setup is. These are my rules, again, from watching so many of these. I demand the market can push. If it can show me it can push a full ATR out of there, that's a bullish tendency. If it shows me it can pull full ATR this way, that's a bearish tendency, and then we trade accordingly. Still don't know what that is. We're still waiting. ES is showing its hand. It shows as a bullish event, but I'm not just jumping in, right? Especially unless it was a really important area. This is not a really important area. It's an important area, but not for my trading strategies, right? So we looked at the bigger picture, the bar chart, that we're not in any inflection zone. Actually, we are in inflection zone, but inflection zones are fade trades. So the volume setup happened in here. Well, I'm not. That's inflection zone would be a short into that zone, and we already know the volume setup is bullish. So this is a great example, right? If I'm just staring at a bar chart, I'm like, oh, I'm going short, and this thing keeps. I mean, this zone is very important. It's been important for a while. We had a gap down here, selling tail. Directional conviction, huge gap down, directional conviction, selling tail, another selling tail. So that zone's important. If I'm just staring at a bar chart, I'm like, I'm going short. Well, the real-time volume event's telling me to go long, right? So that's why, yeah, I understand these areas, but I'm just jumping trades until the real-time volume tells me it's go time, right? So here, let's just see if this 2 ATR worked as well. I don't know if you would have stopped out of the one. This is the reversion trade I was talking about. First one, you would have been in at 22, stop out at 27.75 for the one ATR. The second ATR, you've been at 26.25. So there is a way you get both of these ATR trades on, and you still haven't been stopped out of the first one. So the first one, again, this is I'm not taking these trades in here, but I'm just showing you the propensity for these markets to head back to these zones. So we have a trade based on that. So the first one, you're in at 22.75. Your stop was at 27.75. You didn't get stopped out, and it still hasn't gotten down here, but you're still in that trade. You haven't got stopped out. And then the 2 ATR, remember I said, we don't know exactly how far it's going to go before it gets back here, but it's a very good likelihood it gets back to the zone. Then you take the 2 ATR, your stop's up here. So there's a way right now, I'm sure in my trade room there's plenty of traders that have these on. The 1 ATR is alive and the 2 ATR is alive. And all you do, you're just playing back to this volume event. But then that also will tell me now it's go time to take long if it can do that. So for the position trading. So hopefully you're not getting confused. There's 2 different trades we're doing. So my position trading, that's this part of the spreadsheet. That's all these trading strategies that we'll go over on this webinar, right? That's what I do on the webinars because I can't keep up with the reversion trading. But the reversion trade is this, and then these are all your prices. You just when you plug in the zone and you plug in the ATR, which we got to keep an eye on. Got to keep changing this. That's actually right around there. Then it just tells you your prices, and this is more of an automatic trade. We are not, using subjectiveness. All right, so we're just waiting now. That's bouncing around there. That's bouncing around, NQ's bouncing around this zone. So we just sit and wait. I think I figured out how to turn off the sound here so you guys aren't hearing all my sounds amplified through my desktop. So I'm going to turn on tick strike. If this gets overbearing and you guys cannot hear me talking over this, please let me know. Or the squawk box, the guy that's talking, that's part of my trade room too. If you hear him talking, let me know and I'll turn it off. I mean, you're going to hear him talking, but what I'm saying, if it's like overbearing, like it was in the beginning, because this YouTube software amplifies everything. All right, let's look at. I lost track of crude. Hopefully, I didn't miss anything here. Let's turn off Market Pulse. We'll go over some Market Pulse examples too, possibly if we got time. All right, so you can see there's.
Iceberg by NQ, 190 contracts.
All right, so there's stuff I'm not going to draw these zones. One, because there's been some. So this is a great example of a day where, so you know, if you get my course, you're in my trade room, whatever, and I talk about thresholds, because that's the most important part, because you need to know what amount is worthy of drawing these zones and trading off of them, right? AKA the thresholds. So, you know, NASDAQ 150 is a lot. ES 150 is nothing, right? So we have different thresholds for each market. Today is a great example of. I would not be drawing thresholds for 100. I wouldn't be doing bare minimum threshold. Why? Because we're getting huge size coming through this market. 150 is not significant today, as of right now. If it starts to slow down, then yeah. But you can see right off the bat here. I just deleted this zone, not to confuse everybody. But it had 540 stops, over 500 or close to 500 sell eyes. Then there was another close to 280 buy ice. That's not too bad. But then you had on this new step rows here, you had 775 sell eyes, 318 buy ice, another 200 buy. You see what I'm saying? So you don't want to be using 150 today. Minimum 200. I would go even higher than that. I'd say 250. Meaning just, I'm not drawing, well, this is 200, but it's in the middle of the zone. But meaning if this, say this market moves out of this area, and we get 160 bias. I'm not drawing that zone because I already know this is just like adapting to volatility, right? On days the market's very volatile, well, you gotta adapt your stops, or you should be. You can't be using, you gotta expand your stops, and that's what we do with our spreadsheet and stuff. But the point is, if you're seeing excessive volume come in, don't use bare minimum thresholds, right? So this is a good example. I would look for at least 200. These are both are 200, but they're in the middle of the zone. So I just know this zone is really important. The break of this zone is probably going to lead to a monster move. Why? Just because there's so many contracts traded in this area. What does that mean? It means traders are invested in this area. Somebody's going to be right, somebody's going to be wrong, and we're going to take advantage of it, hopefully. That's that. Crude. Let's see if I missed anything in here. So this was, we had, yeah, I drew this on there. This was 662 stops. And then right after that, you had another 100, almost 200 buy ice.
Nat gas ice iceberg sell NG, 151 contracts.
So I'm going to show you a variation how we can trade off this first setup and then trail the stop to the second one. So the first setup, nat gas is fine. That was the number, by the way. We'll head over to nat gas in a little bit. 70.26 down to 70.10. That's the first zone. That's that stop run. That's 700 stop run or 600 stop run. So let's put that in. And your current ATR in here is 20.20. You want to plug it in. So again, I'm just using the 5-minute ATR on Thinkorswim. It's a 14-period Wilder's average true range ATR. You can see it right there, right? So you can get this set up on, if you have different software like NinjaTrader or whatever you have, you can set all this up. You can set it up the same way. All right, so for that setup to be a long setup, the market needed to touch 70.46, which it obviously did, right? Went up to 59. So I know this setup is bullish. So I'm still going to trade. So this is the conservative way to trade these. You get your ATR, you get your retest of the volume event, and when it moves back away, you go long, right? So I got to hurry up and get this in. I'm going to go long. This is the BARF setup. This is just a blind ATR retest failure of any volume event, which is the most active. I will go over that here in a second. So my entry price is 49. So this is another thing. I'm trading huge size on these accounts right now because I'm trying to get all these live. We'll go over that in a second. Let me just get this in here. So I'm gonna round up. I'll put on 17. This is the barf trade for MCL. That entry is 40. What did I say? 49. Yeah. All right. So I'll put on 17. So if this comes up to 40, 49, 70, 49, I'm long. Then what we're going to do, we'll go over the Apex stuff in a little bit, but I'm being very, very aggressive, way aggressive. Like you should be risking 10 times, a tenth of what I'm risking percentage-wise. So your normal trading, if you're trading a real money account, you should be risking 2% of your account size on a trade at the most. If you love a trade, you can, if it's an A+ trade like we talked about, if your thesis in the direction of the volume event, you can go up to 4%, but you should never risk more than 6% of your account size in a day. That's how you preserve your account, right? Because you're going to have a bad day, and if you overtrade in your account, you're going to blow it out. These I'm trading excessive because Apex has a 90% sale right now, and these things have been kind of languishing, especially with the market environment. They're kind of just going back and forth, and I want to try to get these things live. And we'll go over because each one of these has a different Apex account associated to it, right? Because I'm doing this to keep track of stats. And I want to have, it's much clearer for my trade room to have each one of these as independent versus me just hopping on webinars and like saying, oh, I like this, I like that, I like this. These are specific trade strategies that we're using, right? So each one is assigned its own Apex account. Regardless, I'm trading 20% of my account size on individual trades, meaning I know what I'm doing there, because if I blow it out, it's like to do the $150,000 Apex account, it's like $30 to re-end, and this is this here. So we'll go over this a little later. I show you guys this every webinar, but I'm doing these here, right? So they say it's a $150,000 account. It's a $5,000 account. The most you can lose is $5,000, right? And it has a trailing drawdown. So I'm risking $1,000 on this crude trade. As you can see, it doesn't take a mathematician to figure out I have a couple bad trades and I blow out of the account. But I'm willing to do that because, like I said, it's so cheap to get another account going. I want to get these live. It's like, or I'm going to bust out and redo them because they've just been kind of back and forth lately. So anyway, I'm long crude. So now watch what I do here. So this is the variation. This is kind of an advanced way of trading these, right? So I was waiting for the ATR. I got it. I was waiting for the retest. There's your ATR retest that we talk about. That's over 70%. In my opinion, from watching these. And then when this moves back out, I go long at an ATR just outside of an ATR, right? So that's where I just got long. So now my original stop should be an ATR below here, just outside an ATR, and that price should have been, so I got long at 49, I'm stopping out at 69.87, right? I'm risking 62 ticks on the trade. I don't change what I'm risking. I change my account size. So if ATR jumped up to 60, well, then I'd be risking 154 ticks on the trade, and I can only put on 6, right? So I tell you guys every week, don't trade with static stops where, I hear all the time, well, when I trade E-mini, I like to risk 3 points to make 6. Okay, 3 points on a day when ATR is 3, that's fine. 3 points on a day ATR is 10, you're going to get whipsawed out of the trade probably 98% of the time, right? So it's like I'm adjusting to the volatility. So I change my size I'm trading, not the risk that I'm taking, right, as far as points. All right, so what I'm going to do here, and I may have already be close to getting stopped out. So now there is a new event, right? So I'm going to trail my stop based on this new event. So my original stop was going to be an ATR below here. On this long, remember I got long at 49. Now, because this is the most recent event, you want to default to the most recent event, I'm going to move my stop and ATR below this event. So let's plug this in and see what that new price is, and it's going to help contain my risk. And I'm not just doing it, I'm not just trailing my stop because I want to lose less money. I'm trailing my stop based on something that happened in the market. 70.47 down to 70.42. So let's put that in. These markets are still, the equities are still just languishing in those zones, so we're not missing anything there. Your ATR is 9.196. So now, based on this new setup, If I were to go long, my stop would be 70.19. So now I just saved myself like 50 ticks of risk. I forgot what that first stop was, or 40 ticks. I think it was 86. So 70.19. This is the one issue here is it's already pretty much close to stopping me out here. With my change stop. So I'm going to move this down outside the zone because I don't like entering trades or exiting trades in the middle of prior volume events. So I'm going to risk an extra 10 ticks. I already got a benefit of moving my stop up because of this new volume event. So I should be at 19. I'm going to move it just outside the zone because I don't want to stop out in the zone because these markets have such a propensity to hit these volume events and then rip off. That's why we trade the ATR retest failure trade, right? So I'm not going to stop out right in the middle of where all these stops were. Why? Well, what is that? Well, guys, when somebody stops, somebody's sitting in the order book with offers, right? Somebody just got run over here and then the market moved higher. What are you doing if you had your orders in the order book, your offers in the order book, and you get run over and it does that? What are you doing? You're praying it comes back so you can get the hell out of the trade, right? Well, that's why I don't like stopping out because this has a very good chance of hitting this area and ripping back out of here. That's the ATR retest failure. That's the philosophy it's based on. Guys get run over, hold their breath. They either hold their breath and then they have to puke. If it goes, if it doesn't go far enough for them to puke, when it comes back, they're like, oh, thank God I'm out. How do I know that? Because that's what I used to do. All my setups are based on my personal experience as a large scalper. So that would be, pretend this was me. I was selling, or I got run over. It would go, this is ES, right? I was just trading ES at the time. It would go against me, and I'd be like, I have my finger on the trigger. If it traded up here, I had to get out, stop out of them. Other than that, I would wait. And if it would come back, I'd be praying to God it would come back because I'd be watching my P&L tick down like 200 grand or whatever it was at the time. And I'm going to show you those videos here very soon, by the way. Not today, but I'm going to have those videos in my old trading days. You guys will get a kick out of them. Anyway, I would sit there and hold my breath. When it would come back, where I got run over, I start peeling out of my trade. So I would have resting bids to account for the offers that got swiped on me. And if those don't fill, then I turn around and it starts running away, then I got to go to market and get out. That's what ATR retest failure is, right? So that's why I'm not stopping out in the middle of the zone. I'm going to put it down. I'm going to risk another 10 ticks, and I'll put it at 09 versus 19. What did I do here? I think I just... Oh, that's why I had an overnight trade. Hold on. All right, so that stops working at 70.19. I mean, 70.09. So we're long, right? So let's see if there's another trade I could put on here. Yeah, I could put on the lick trade here too. So these are the two strategies I put on right now. I already have the barf on. That's this. Blind ATR retest failure. Any volume event that gets an ATR away, that retests, that fails, I'm long. Or I take, right? Well, what else can I take? Well, there's resting liquidity up here too. I just didn't see this at the time, so if this comes back to the 49, I'm going to put on a lick trade too. And here's your lick trade. You see how I'm doing different strategies here? So that's this trade, right? And this is the most recent account that is associated, 58. So I'll put that on as well. Hold on. So remember, until you're filled, I'm already filled, but I was filled on the first one. I wasn't filled on the second one because I didn't see it. But until you're filled, you should be adjusting this ATR. So this entry now is at... Oh wait, this is the second setup. So the first setup was 49. So if it gets back up to 49, I'm putting that on. Hold on a second. That's not that market. That is this market, 49. All right. So that's working now too. I'm already long barf, and then I'll go lick if it trades 49 again, and I'll put my stop in the exact same spot. All right, let's see what else is going on here. Surprise, surprise. I don't know if we've mentioned this pattern that I've seen 50 million times. You got the one ATR, you got the two ATR, back to the zone. Moves away. Actually, I should already be long this. I missed this. Oh, wait. Hold on. That's not right. That's right. So this was the volume event right here. Buy ice, 2 ATR. Exact back to the zone. Now I can go long this. ATR, this is the BARF trade, and it might be a lick trade too. So back over here, make sure your ATR is up to date. Same 4.93. I can go along at 23.25. I could put on 15 MES. Again, I'm risking 20% of these Apex accounts. Don't try this at home, especially if you're trading a real account. I mean, a live account. All right, so this is, what did I say? 23.25. I'm going long. And that's the BARF. Let's see if there's any liquidity above. We can put the lick trade on as well. Yeah, there's some liquidity. It's close, but I'll put this one on. So the liquidity trade, I'm literally just playing for the liquidity. This liquidity I do not pay attention to. You serve yourself well not paying attention to Algoville, right? Liquidity that's been in there for a long time, that's the liquidity that I'm trading to, and I pay attention to. I don't pay attention, and this stuff's been sitting in here, but when you start seeing these, these are just algos. This is why it looks like a Christmas tree a lot of times, because algos are putting in orders, pulling, put them. You can see them. Watch, they put it in, they pull it. The market gets close to them. This is what I'm talking about. You can't lean on this size because it gets there and then they yank it. And then they put it back in. Then they yank it. They're just playing games with you guys. Don't pay attention to that. As far as a lick trade, I'm paying attention to that. So I will go along that as well. 23.25. So that's the lick trade. Hold on. Just got filled on something. All right. So I got. So I'm going along both of those, BARF and lick. NASDAQ is just still sitting in this zone, so we're still waiting to see what this turns into. And I think I just got filled. I got filled on my lick long as well in CL. So I've got two strategies long CL based on this first event. I trailed my stop to the second event that we talked about. And if this market trades 23.25, it looks like I should have already been filled. But I'm not going to get in here. I get this question all the time in my trade room. They're like, because a lot of times I'm on these webinars on one screen and I miss the fill, so I should have already been in this trade right there. They're like, well, if you can get in it, if you should have already been filled, why don't you get in right now? Well, because just something in me mentally was like, hey, maybe I got a break. I got lucky. I didn't get filled, and this thing does that. Then I save myself a loser, right? So if this comes back to that price, I'll go long. I should already be long, put it that way. So if it comes back, I'm going long BARF and lick in there. And then we watch NQ, see which way this breaks. This may, these markets may sell off, and then I'll have an opportunity to, I got lucky and didn't put on the long in ES, and I could put on a short in NASDAQ. And I'm telling you, this is a very important area for these markets. NASDAQ is trying to peek its head through right now. The other thing we want to look at is what does relative volume look like, right? Because if you see the relative volume spiking, the big money's starting to really play. You see that with the icebergs and stuff, but you really get to see it in the relative volume overall when this thing starts to spike. So this is a relative volume chart. You can see pre-market, those early morning numbers, the relative volume is spiking quite a bit, right? So this is its own SI, this is just like we use the SI indicator. This is the same principle, right? These are loaded up traders from here to here. Granted, yes, 25 points. Somebody was selling this heavily. Well, if somebody's selling it, there's got to be somebody absorbing it. So somebody was buying it passively. Either way, this is your line in the sand. This is like your bigger volume event that we use, like we use the SI. So my point is, these are the lines in the sand. Pay attention, because when this market breaks this way, all these guys that bought are going to start to puke. That's how you have to look at it, right? You don't know exactly what people were doing in here. I don't want email. You don't know if they're trading options and hedging or they're getting out of positions. You're never going to know. So why are you wasting your time thinking about that? All I need to know is there's a lot of volume in here, and I know all these markets trade with these areas, and you just have to assume traders are wrong and they need to get the hell out. Or traders were wrong, they were short, they were aggressive short, they need to get the hell out. So the main break of this area is important. And you're going to see that's pretty much this balance area, right? They're in right now. So that was pretty much 44.35 to 40 down to 44.10. Well, what's the balance area? Right there. So this is a regular trading hours, so you don't see that move up overnight, but that's basically this entire balance area, right? And then we know yesterday there was huge volume in here, huge icebergs, tons of sell ice right at the open. There was like 5,000-6,000 sell ice at the open, and there was more, and then there was more at the end of the day. Whatever way this area breaks, and I already told you I have a bearish lean right now. If this breaks down out of here, I have a very bearish lean. But ES is right in the middle of its, and Q is trying to break out of its right now. So this is going to probably get interesting. And this may turn into a bearish event. So I never got that long on an ES. That was just basically lucky because I should be long there. But I am definitely watching this to go short. So let's see if this was, what's our ATR price for an official short. First of all, you want to check your ATR. It's up to 30.61 now. So to make this a short setup, it needs to touch 24. Not there yet. Trying. Let's see what this looks like. This is the market pulse indicator. So this is like an audio alert. It's like an enhanced version of the tick strike. So again, guys, everything that I talk about, you can get. It's all on my website, right? Hold on, I just got filled on something. I just got stopped out of crude. That's what that was. So I stopped out of both those trades in crude. Anyway, all of these Bookmap discount. You saw the Apex discount, spot gamma, the hero indicator. You get an extra week. Tick strike is this. Very important. And the market pulse is basically it's tick strike on steroids, and then Trader Sync that keeps track of your trades. So maybe we'll go over some of that stuff that continues to be dead like this. All right, we still don't know what that is. I got stopped out of my crude longs, which sucks, but that's the way it goes. You know, and I did, guys, this is the whole point, right? Trading is probabilities. So we'll go on this little rant now because we do it every webinar because this is the most important thing. This is another part of my trade room. This is directly out of trading in the zone. You're identifying edges. The edge that the best edge I've ever seen, like I tell you, nonstop, is the SI indicator and the real-time volume events, right? You have your predefined risks. So this is exactly what he has in his book, right? And I just put in my own stuff, and then these are areas I get paid on. The whole point is and then he has an exercise that we did this is how the ATR reversion trade was made, because I kept saying, wow, these volume events retest 70% of the time. So I've said it about 1,000 times. So I'm like, well, why don't I take advantage of that retest of the zone? So that's how we came up that trade, just to prove to my room, if you have something with an edge and you continually take it, that's how you make money trading. It's probabilities. It doesn't mean every one of them works in any trading strategy, right? You're just putting the odds of success in your favor, right? And if you can think about the trading in the appropriate manner, the 5 fundamental truths, we'll get into that in a second. You can do everything you need to do over a series of trades. So if you have an edge over a series of trades, you will make money. If you don't, you won't. If you're random and one time you take it and another time you don't, you won't. Like that's most traders, right? Then, like a casino, you can own the game and be a consistent winner. And here's the 5 truths. Anything can happen. You can have the best trade on. I put on 2 trades yesterday during Clown Nose Paul talking, got stopped out of both of them. Anything out of his mouth can just rip the market the other way, right? So anything can happen. So you put on a trade, you follow your rules, you put your stops in, and you just realize anything can happen.
Stock IGC, 382 contracts.
Gold's flying around. We'll go over there and possibly. You don't need to know what's going to happen next in order to make money. You're not going to know what's going to happen next, right? So all you can do is find your edge, put your trade on, and follow your rules. That's all you can do. This is the biggest one. There is a random distribution, random, between wins and losses for any given set of variables that define an edge, meaning you're going to have some losers. So my point was, where I got on this tangent, and every moment of the market is unique, is because I took that loss in crude that sucked on to the next one, I know this is the best edge out there, right? So it's like, I know over a series of trades, all these trading strategies will be winners, right? It doesn't mean I'm going to have, we talk about this every week too, your P&L is not going to look like that. I'm trying to switch colors, won't switch here, hold on. It's not going to look like that, right? Yeah, maybe for a day, maybe for a week if you're on fire, but other than that, it's going to look like that. Right? You're going to have drawdown. That's an edge. An edge will keep moving higher, but you're going to have drawdowns, aka losses, aka loss. Right? So don't panic That's why you need to be trading the appropriate size, right? Because if you're, so I just lost 20% of my account size, these Apex accounts, and that's fine. They got a sale up till July, I think it's July 4th or something. It's 90% off. I'm just going to reload them. But the point is, if you're trading too big, you're going to blow out your account. All right, let's see what's going on here. I still don't know what this volume setup is, and I still have my longs working here, by the way, for ES. So say I did get filled. I was supposed to be filled here, right? This is exactly why, as you're seeing, I should have been long there. I just didn't get over here quick enough. Actually, 23.25, I should have been long, right? But when I get long there, my stop is not some random place in the middle of Algoville when they know nothing's going on in the market. My stop, I force these markets, so even if this comes back now, my stop is I'm forcing the market to get back the full ATR. Get back through a volume event, which is the most important. Then trade through another ATR outside of the event, and then I say, Uncle, I'm wrong, right? That's a lot to happen for you to be wrong, and that's why I do that. Because I know people get on these webinars mumbling, what the hell? Like, for instance, look at this risk here in the ES. Right? If I get filled at that 23.25 price, actually this is a little higher because the ATR has just gone up. We're going to have to move these up a little bit. Actually, that didn't change. I'm risking 14 ES points on this trade. People are like, well, what? I don't want to risk 14 points. Well, that's crazy. I risk 3. The market does not care that you want to risk 3 points. The market cares about volatility and volume events. So stop putting your stops at arbitrary areas that it means nothing to the market. Put your stops in areas that mean something to the actual market, right? So that's why I will get long there and my stop's way down here. And trust me, if the volatility, first of all, the volume event is the fuel in itself, right? So that's telling me the market can really roll if it gets rolling in my direction. And then the ATR is just telling me, oh yeah, I'm risking 14 points. Well, I have a good chance if this thing gets rolling, I can make at least 14 points, so a 1-to-1 trade, probably 28 or 56, right? This is inherent in what we're doing because all these traders are loaded up. Well, when they go to peel out, that's what causes the outsized moves, right? So stop putting your stop orders in random areas or static where you're always risking the same amount. All right, I got to take a breath. If you guys got questions, throw them in YouTube, please. And we only have 5 minutes. I want to get on this webinar too, so there's really been nothing doing. Just that loser and crude. And I'm thoroughly convinced the move out of this area for NASDAQ, that's going to be the move of the day, right? So let me get more size here now. So this still isn't a bearish setup though. I still demand, from the way I trade, from watching so many of these, I still demand that this market touches 24 before it shows me it's a bearish event, right? All right, so let's watch. I still have my longs working here in ES, so I still may go long. So hopefully we'll get a trade on before the end of this webinar. But so I don't know what NASDAQ's doing yet until it can get out of that zone either way. And I already know this is a bullish event because it was able to push an ATR. Now this comes back, I'm long. I should have already been long. Like I said, I just missed the trade because that's what I do on these webinars because I've got so much crap going on. Joe Dallas, do you think consistently profitable edges exist without reading real-time volume data? Absolutely not. Yeah, I mean, I shouldn't say that. Yeah, you can have an edge. I shouldn't say that. Yes, you can have an edge. There's things that work. Like I know there's an edge so these are my inflection zones. So strike that from the record. I didn't mean absolutely not. What I mean is there's an edge in these, but your edge is much, much, much greater. And I'm talking any indicator or anything you're using, right? If you understand what's happening with the real-time volume at that area. See what I'm saying? So I say it all the time. You may be a profitable trader. There's plenty of profitable traders that don't use real-time volume. Could you imagine what they would do if they had real-time volume and they understood what was really happening right at the moment? That's my point. So I did not mean there's no edge in other things. There absolutely is an edge in other things. This is what I used to look at before Bookmap, right? I didn't have a strong edge. That's why I got knocked out of trading. But I know these volume event or these areas like these Izzy zones. You get these from my trade room as well. I post these every morning for my trade room members. I know these are important areas, but what I always wanted to know is like, okay, yeah, that's an important area. Well, why when it say right now, it comes up here and rips right through these, and I'm like, okay, so why didn't they hold this time? Well, the reason why they didn't hold is because of something was happening with the real-time volume, right? So that goes for anything you're looking at. If you're looking at Bollinger Bands, the Ludwig levels, so we haven't really gotten into these today. I wanted to put that in my spreadsheet. These things are just asinine, ridiculous, good, right? So the second most powerful thing. But I don't, this is an edge inherently too. If you just trade, and this is what she's done for 15 years, all the members, she's been around for 15 plus years, right? All the members of her software, they would just literally like fade these blindly. And there is an edge in that, right? You can make money just doing that. There's a better edge waiting for a distinct volume event, aka the slug. That's this one. Stop running a major lug. That's a better edge, right? Meaning I'm using a volume event at an important area, right? And think about the slug. Think about what a slug would be. So we already know these. If you guys don't know these, so first of all, here's our website, because you guys don't always, I must be mumbling when I talk about this. It's Ludwig Levels, ludwiglevels.com. You go here, you can get a 3-day trial to check them out, and you'll be blown away just like everybody else is when you get them. Name, number, put in the comments you saw it on the Bookmap webinar. She'll give you a special pricing, right? So a slug, now think about it. Stop runs are usually just retail trader pukes. They're not initiative buying like the big money's buying. But we do have a setup for that too. It's a stop and hold when you get a stop run, and then the big money comes behind it. But inherently, stop runs are just pukes. So could you imagine this is already an incredible resistance area, and then you get a puke that's not real buying, and then it fails? How good of a setup is that? So this is my point. Yes, market profile, the same thing. These tops and bottoms of these market profile composites, that's an edge to trade there too. But your edge is, I don't even know the percentage greater if you know what's going on with the real-time volume, right? So that's what I meant by that, Dallas. Why not use a fib tool with ATR size to project 100%, 200%? You can try that. If you find something, come in my room and point it out. Guys, I'm always willing to listen. If you are a trader, an actual profitable trader, or a trader that actually wants to get better, you're always open to new things. That doesn't mean, see, there's a fine line there, right? Most traders are over the top with that, where they're like, everything they see they throw on their chart, and then they've got 85 things on the chart and they can't make a decision. I don't mean that, right? So even for me to even implement these lugs, this took me months. I had a guy in my trade room that I mentored. He was trading micros, and then within like 6 months, he had made like $1.5 million trading off the lugs and the volume events, right? So he kept telling me these Ludwig levels, they're the best thing I've ever seen. You gotta check them out. You gotta check them out. So then I looked at them, and I didn't just implement them right away. I didn't talk about them on webinars. I watched them for 4 to 6 months. Actually, it wasn't that long. It was about 4 months. Because I saw enough. Like after the first week, I'm like, these are ridiculous. But I didn't want to. I'm not introducing anything in my personal trading on a whim. I'm going to watch them for a long time and be like, okay, there's an edge. After watching these, I'm like, these are going into my trading, right? So I'm always, the point is the fib thing. I'm always open for it. Open to something that I didn't see or something I don't know about. Maybe it's something I don't even know about. It's from old school. Watch the movie, you'll understand the quote. But I don't just throw stuff on my chart. So the point is, yeah, that might be a great idea. Test it out. Let me know your results. Come in the trade room. Throw it out there. That's another great thing about my trade room. People are always throwing out ideas, right? So this is my trade room. So I post in here when I see. I mean, look at this. You get just Helen Box, a very good trader in there, right? And you just get people throwing in ideas, and hey, there's a setup, and there's Helen Box piano right there yesterday on the Apex, right? He's got like 85 Apex accounts. Just kidding. So I think the max is 20. Point is, you're going to get a lot of good ideas where things come to you and you're like, well, I didn't realize that. I didn't know that existed, right? Don't implement it in your trading right away, but start to watch it. So my point is, if you got a great idea, hop in my room and let's talk about it. All right. Any other questions? I'm going to hop off because the Bookmap webinar is starting. Let me see if I get filled on any of this quickly. I'm out of gas today talking. It's like I've talked straight without a breath. So no fill yet back here on the ES. I will go long for Chase 23/4. Joe Dallas, thank you very much. I have a barely profitable strategy. I'm always looking for ways to increase profitability. Well, I can promise you, if you understand what you're doing with these volume events, this will increase your profitability because this is the edge. This is the best edge you can possibly ever use. And then just use them in your areas to enhance, and you're going to start to understand why your areas don't work sometimes. That's the key, right? You're like, oh crap, this didn't work this time. Then you go over and look at the volume and like, oh, that's because that was a bearish volume event, right? Guys, this is why I'm doing this, is to show you this is how you're going to compete with demand. This is how you're going to compete with the Christmas tree algos. There's 85% of the market, right? That's how you compete with this stuff. That's how you compete with the big money, knowing what they're doing, right? This is showing you what they're doing. These are supposed to be hidden. They can't be real happy that this is being broadcast, right? So if you understand what the big money's doing, how the algos trade, like back to zone, stuff like that, if you can't beat them, join them. All right, short webinar today. Nothing really happening anyway. I'm going to hop on. I posted that link for the Bruce. They're going over the sweeps indicator and absorption indicator. Sweeps indicator is these black dots on here, black and white dots. Really important to know these areas where guys are swiping. Like you can see, someone came down here. This is an edge in itself, right? Like I'm not drawing these zones per se yet, but you see here, someone came in and just swept 2,500 contracts. How'd that work out for them? Well, look at that. You ever see this routine? Right back to the area, reverse. And this is separate from the sell ice. So this is where you can get an edge here. So that's the webinar that's coming out. That's part of Global Plus. Highly recommend you get both Global Plus. All right, guys, I will be, next week's actually going to be traveling, kind of like the late night shows, travel to different cities. I'm going to be in Texas next week for my daughter's national golf event. So I'm going to be doing the webinar from a hotel room on a computer with a few monitors. So that should be interesting. I will see you guys next week. I do this twice a day in my room every day. Head on over and you will learn things that you never knew existed, I can promise you. Thank you. See you guys later.